Hello, hello. Good morning, good afternoon. How's everyone doing? Good afternoon, Ramesh. So we got Sam, Ramesh, Jose is here. Sachin is trying to join. Ijaz, Alfred, Sri, Gabriela, Nyanka. How is market treating you? We'll get started, guys. We'll get started. Jose says, fantastic, fantastic. Yeah, uh, good or bad, this was pretty, I would say, exciting week, though, right? There's never a dull moment, I would say, at least for this week. We got Ramesh says, good until Trump messed it up. Come on, that was only on Friday, I guess, right? That too at the last moment of Friday, right? Not even because I remember I was outside home, and I think everything was okay till like in the morning session, and then maybe after 11 o'clock or maybe after 12 o'clock, I'm like, what suddenly happened in the market? Anyway, what matters? But we had a lot of activities in the market this week, right? We got a Trump, we got uh, deep deep seek, deep fake, whatever you want to call. We got a FOMC, and then we have some big tech earnings, right? It was a very active week, a lot of things coming, all together in the same week. So that is great. That's great. I bought a few Uber shares. Yeah, I think Uber didn't Uber share. Oh gosh, I wanted to. I think Uber shares fell down after, I guess, Tesla earnings. So we will review Tesla earnings, but there was some weakness on Uber shares. Uh, yeah, it fell on it, caught up. But I think after Tesla earnings, it lost a bit. Always happens whenever Elon Musk will come and talk about robot taxis and all that stuff. We will see Uber kind of selling off a bit. Jose says bought Lyft. Wow, I never. I don't think I bought Lyft. Maybe in last few years. So, Jose, what's your thesis around Lyft?
So, well, I think it's the same thing as Sam's Uber call. So basically, Uber and Lyft are both under investigation from the FTC for price fixing for the wages for the drivers. And but it's Lena Khan, so I think she's gonna get replaced. Like
Yeah.
this is last minute Biden thing, so I think when that gets lifted, they're both gonna go up, and they're all kind of bottomed out, just like in terms of value. So I bought some.
Okay, so let's put Lyft.
Also, I saw David Tepper bought a bunch of Lyft, so that helped me get
Ooh,
into.
so you are behind Appaloosa guy.
Yeah, yep.
I mean, he's a great investor. He's a great
I
investor.
mean, I bought China stocks too because of that.
Yeah, yeah. So anyway, I have Uber. I don't have Lyft. Um,
Uh,
and
Excuse me. I bought Uber because they're not just a car taxi service. They also I also have that other the Didi Chinese company.
Mhm.
They have they're invested in the future.
Right. Yeah, so I mean, between Uber and Lyft, my only reason why I've not invested in Lyft is it has got only one thing, which is ride hailing, and no other businesses. Whereas Uber is a little more diversified. They got a freight, they got a Uber Eats, right? And when it comes to ride hailing, I mean, there is not much of a loyalty in this business, right? Majority of the customers will have both Uber and Lyft, all the apps on their platform, and whichever is on their cell phone, and whichever provides the cheapest ride, they'll go. It's a very uh, again, this is my perspective. Consumer interaction with Uber and Lyft, or let's say any delivery service, is very transactional. We don't build a long-term relationship with those. So when it is very transactional, all we are looking for is cheapest and quickest. And when it comes to cheapest, we could see many of these companies trying to undercut each other. So unless they have other businesses to support, my thesis was, guys, I want to have, to invest in a company which is also doing something else, and also in other geographical locations. So Lyft is not outside of US, whereas Uber is in other countries as well. Again, that was my thesis, so I never invested in Lyft, and I haven't looked at Lyft in maybe in a year or two where the stock is, but that was my thesis.
Yeah, also I just like it's kind of doing like a turnaround chart just by the way that the price is moving. So I like to trade
Okay.
those kind of charts.
And Lyft had some change in didn't it has a change in CEO? Lyft? Didn't they bring a new guy? Again, I might be wrong. I might have heard it somewhere, but I don't track this stock, so could be wrong.
Yeah, I think they're new CEOs in 2023.
Oh, okay. All right. Alfred says, it will continue on Monday. London was closed. We should see some more dumping on Sunday futures. Oh, you got a crystal ball. So if it is something more dumping happening, uh, depending on, how your portfolio is, we'll see if you need to buy anything or not, or maybe just wait and watch. How about robo taxis? Yeah, we will talk about robo taxi and what Tesla said. So hold on your horses until we get to the Tesla earnings. So we will look at Tesla earnings as well. Sachin is saying recently I saw Wings as a third option as San Jose Airport. Oh, that's okay. So and there is Y Ride and other coming up. Correct. I mean, in when it comes to the ride hailing, there is no differentiator. At the end of the day, it is the least waiting time and the cheapest option. That's all we are looking for. And if any service can provide it, I'll go to them. I'm not married to Uber. That's interaction is very transactional. Fred says TOS web has improved greatly past month. You can do everything. Oh, I've not used it over, maybe a year or so. But yeah, if it has improved, maybe I'll check on it. I remember, I think last I had used maybe a couple of years ago when I was on an iPad, and then their the TOS mobile app or iPad app isn't that great, so I used to use the web application. But now, oh, you can actually plot your P&L so nicely. Yeah, looks great. Looks great. Option to copy URLs so others can look at the setup. Oh, cool. All right, but one complaint that I have with TOS, and actually was on a call with Charles Schwab guys. I wanted to I called up the Charles Schwab to ask them on their website where can I find earnings transcript. So eventually they said they don't have earnings transcript, but they told me, you under analyze tab you can get some earnings data under fundamentals and earnings, and and they told me that this data get updated in real time, but it actually does not. So I don't know. Charles Schwab guys don't know what they are doing, or maybe they got wrong information. So I'll check. I'll check. What else? Lyft is getting closer to returning to profitability. Last few years of big losses, trending towards back into black. Sure. I think every company, or not just ride hailing, but every tech company in 2022 tightened up the belt and started to focus on being more profitable, cash flow positive, operating margin positive, on all that stuff. So, Alfred saying you need to log into Charles Shop or the app to get the info you just talked about. Uh, yeah, I mean, I was looking. Yeah, so I think from on the web, on their website, yes, I can get the earnings and the EPS and all that, but they still don't have a earnings call transcript. What I was looking for was earnings call transcript. Uh, I know. I think Seeking Alpha has earning calls transcript, and some of the other sites also have it, but then You try it for 4 times, and the fifth time it'll ask you, hey, you have to register or you have to pay. I don't want to do that. Sachin says, ask edgar.io. Yeah, Edgar has got all the SEC filings, but I don't think even Edgar has, they don't have an earnings transcript. But I've used Edgar a lot of times, Sachin, but maybe I think Ask Edgar is actually doing some better intelligence, looking into the documents and maybe adding some AI stuff to basically extract the knowledge. This is the chat GPT. True, true. I guess there are a lot of these chat GPT stuffs going on. All right, cool. So let's start with today's stuff. What I have for today is, yeah, we'll go through some earnings. That's definitely now we are in earnings season, so it's makes sense to now start looking at the earnings. So for today, I have ASML, Tesla, Meta, and Microsoft. We'll look at what happened in the market generally. Of course, on everyone has been talking about Deekseek and how it rattled the markets on, I guess, Monday or Tuesday, whatever. And then yeah, we'll look into it. I'll give you what my thought process is, and we'll seek your opinion on what do you think about DeepSeek, right? Is it better? What does that mean for a lot of other tech companies? I mean, that's what spooked the markets on Monday. So we'll talk about that. And
Vivek,
yeah, we look at portfolio. This is our first meeting after a month end. So I do come and share what I hold, some top 10, 15 positions in my portfolio. You don't have to follow any of these. Please do not. But I just want to be transparent because I've seen a lot of people talking about if a stock goes higher, then suddenly say, hey, I bought it month ago. And if it goes down, you'll still then talk, I already sold it. You won't get all kind of a BS from me. So I'll just come and at the end of every month, I'll show you what's my top positions are. I also put it on Twitter or X, whatever you may want to call, just from transparency perspective. All right, we look at a couple of companies that you guys had asked for, NTRA and ISRG. If the
Vivek,
investors are here, if not, then I'll skip them. Okay. So that's on my list for today. If you have anything else, let's bring that up, during the meeting. Anything else? Any other stuff that you guys came across this week that you think we should discuss? I'll also talk a little bit about crypto because now crypto and our traditional finance is merging. So makes sense to keep an eye on crypto as well. What else? Any other topic? Speak up or hold your breath forever? No? All good to go? Sounds good?
Impacts on tariff.
Tariff. Okay, maybe we'll talk a little bit about tariff. All right, so let's dive into the session today. Get through regular disclaimer. Nothing I say is financial, tax, or investment advice. Do your own due diligence and study. We'll talk about companies. I'm gonna bring up 4 or 5 companies of earnings. We're gonna talk about some other individual stocks. None of them is a recommendation to buy or sell. Okay, personal finance is more personal than finance. So you need to figure out what works for you. I see some message. Physically check the site of A Taxi Ports Construction in South San Francisco. So ACHR, I think, is Archer Aviation, and Joby is Joby Aviation. Could be a real deal in 2026. Yeah, maybe they will move away from just being a story to actually having a business, right? But I think having a business is not enough. Again, it depends on which portion of portfolio do you want to allocate it to. If you want to allocate it to your, what I call is as the moonshots, right? Or rocket ships part of my portfolio, sure. Archer and Joby may find a place in that, but I don't think I'm going to put them in my core part of portfolio just yet. Not even in growth yet. I think for me, probably they'll just find a place in a moonshot portfolio. Sam says, how did big tech respond to China, a number one supercomputer 15 years ago? I have no idea what they did. I wasn't in US. Uh, I think I was, right? Just completed, I guess, my 15 years. So, but I don't know. Maybe I just come to US. I have no idea what was happening between US and China. All right, so let's look at the markets or the markets. For like I said, this was a very active market. This week we had a FOMC meeting. So after FOMC meeting, we get a Fed rate. So rate stays unchanged, which should not be surprising because if you look at Fed watch tool, we were not pricing in any rate cut. So I think the first rate cut is being priced in June, which is like 6/18 is when the June FOMC meeting will happen. And that also is, I won't even say that it's being priced in because it's like 46%. So, but that is the maximum. So I think market is thinking maybe we will get one rate cut in June and then another one in December. And then we are done. That's it. 2 rate cuts. At least that's what the market is pricing in. I remember, I think, was it 2023 or was it 2024? Market was pricing in 7 rate cuts, in November or December of the prior year. And then as the time progressed, we moved from 7 to 5, 5 to 3. And I think at the end we got only 1. So this is not set in stone. Markets can be wrong. Participants can be wrong, have been wrong for many times. But for now, I don't think it was a surprise that we did not get any rate cut. So currently Fed rate stands between 4.25 to 4.5%. No change over there. We'll see what happens in June. Maybe, and again, if you look at Fed CME watch tool, the percentages will vary based on what's happening in the market. So maybe we should look back somewhere near June to see how things have changed. But for now, I think they're just looking at June. GDP numbers. Come on, our GDP continues to grow strong. We were up like 2.3%, right, which is a decent growth. I think we probably might need more, but I won't call it as a dull growth, right? Now you look at the other countries, other big economies. Japan has been kind of a stagnant for many decades now. China's China is facing its own problem of deflation, and Germany is kind of entering into recession. So given what happening in the rest of the world, I'll take 2.3% GDP growth, any day. So, and looks like the estimate for the next quarters are close to 2%. Right? Not bad. So overall earnings are off to a good start. A lot of tech companies I will review 4 or 5 companies earnings, but overall a good start. I think when you look at the companies that are reported versus what's expected and the EPS growth sector is all fine. Technology stocks are down for the week, right? Even though we had a good recovery after the initial Monday sell-off. Monday, the tech were down 3%. At some part of it, I remember during the day, QQQ was down 3%. Of course, if we have some of the big semiconductor stocks, the darling NVIDIA was down 17%. NVIDIA hasn't recovered. All other companies, TSMC was down. Anything that has to do with the AI, all those companies were down on Monday. Sharp sell-off. That was sparked by Chinese AI startup, Deekseek, right? And suddenly out of a blue, on Monday, the market sold off. I mean, I won't say it was completely out of the blue. We'll talk about DeepSeek. I mean, we had seen its the base release in December. It's the next level of a reasoning model that caused all this shiver, that basically send the shivers down the spine of all the VCs and all the AI companies which have been spending billions and billions of dollars. So for the quarter, S&P 500 earnings are on track. Maybe earnings will grow close to 12%, which looks to be on track. And if it does happen, it's going to be a strongest pace since 2021, right? So that's great. I love companies when they are reporting good earnings. And of course, we also see market actually rotation is happening, right? The market is not driven by only one particular tech sector. Of course, it has got outside position in S&P, but we are start to see rotation happening. Over the past 6 months, financial and industrial sectors have outperformed the tech sector. And industrial has outperformed the tech sector. Right? Financials. So industrial, we call it as, hey, those are old industries, old economy, and that has outperformed the new economy. It is good to see this rotation. There have been a lot of cries around the concentration in the market. Hopefully, when we have these rotations and more money start to flow in other sectors, we should see market being a little more diversified. Right? What else? So overall, sector-wise, year-to-date, tech is negative. Right, and the best communications service is positive. I think that's because Meta is in this. The healthcare, financials, these are defensive sector, which are positive. Materials, industrials. Look at these. These companies are outperforming the tech. I mean, tech is the worst one in it. But what? We are just 1 month. Who cares about what happens in a month, right? In a year. 5-year period, 10-year period, tech has still done better. Sorry, someone wanted to say something? All right. So that's overall sector specific. Ross is, are we ready for the inflation trade? I mean, if inflation, first of all, I don't know if because of the tariffs, inflation will come in. That's the biggest concern around tariff is it will give rise to inflation. But if you look at the playbook of Trump during its previous called Trump 1.0, the previous presidency, he did impose tariffs, but we did not have inflation. Right? But so I don't know. And it comes to inflation. If the inflation number goes higher, market will sell off. And I think I will actually take that as an opportunity to buy some good companies that I want to add to my portfolio. There are some sectors that will be impacted by inflation. There are some sectors that where the company, if the company has got a good, brand, or the companies can pass on the cost to the consumers, I mean, that will be good. It will be good to hold that company. If the companies can't pass on the cost to the consumers, I think that's where we need to worry about more. Owner says 2.26% in a month, which might equate to 27% this year. Amazing. Yeah, I mean, we can't say anything about what's happening in 1 month. That's giving me a little concern. You could just 27% may not be too bad. I mean, it might not be too far-fetched. I mean, if I forget what happened in the last 2 years, then 27% is not egregious, right? But considering the fact that we already had 26% and 22%, I mean, both 20% years in over the last 2 years, getting another one 20% high, sure, why not? But Maybe or maybe not. I mean, I'm not betting against it because now we have a change in administration, and but yeah, I mean, it has happened only once in last 75 years. Maybe we will make history, and then we'll come and talk about it. You know, we were part of the history in which we had 3 years continuous gain of more than 20%. Right. So we'll see. I don't know what will happen in next 6 months to a year, but 5 year period, I think we should still be good. Many stocks, at least these are the ones which I hold in a portfolio, and those companies are hitting new 52-week highs. So I guess a lot of enthusiasm is already there in the market. And that also means that these stocks are not getting priced for perfection, right? So, and if they do not deliver the results, or if there is any kink in the result, we'll talk about Microsoft, you know, the stock will sell off. So there's a lot of expectations that have been built into the stock prices. So far, some of the companies have done well, and you know, all this enthusiasm after new administration coming in, and you know, AI and whatnot. Markets are not cheap. That does not mean that it will fall down, but just understand there's a lot of positivity, a lot of future earnings being built into the market. And if the business doesn't deliver, then we might see some weakness. That's all. So yeah, a lot of you know, stocks are hitting 52-week. I don't think S&P is actually at all-time high yet. I think its all-time high was what, 610? Yeah, I think we closed just little all-time high. It was this week 610.78, but then I think on a Friday we closed. We had some sell-off on Friday, just at the near the close. So yeah, expectations, a lot of expectations being built in. Fear and greed index sitting at neutral. Maybe people are already hedged. I don't know, but we did had some fear coming into the market through Deepseek, which I do want to get in and see, you know, what had happened and why we had such a big sell-off. So Ross, from coming back to inflation trade, what are you planning to do for inflation trade? Since I asked the question, I'm assuming you are already thinking on how to protect. I don't know. What's your expectations? What's market gonna do? Ross? Anything, any ideas to share? Alrighty. Okay, so let's move on. Deepseek. Anyone able to spend some time on Deepseek? What do you think? What the heck they did on Monday? Come on. I shouldn't be the only one talking.
They don't have very good reviews for Deepseek.
Review on what the Deepseek app?
Yes.
Okay. Yeah, so I didn't even look in. I think now I guess a Monday or Tuesday, basically, if you are not having a Chinese phone number, they're actually blocked from accessing DeepSeek app. And also the company behind it had reported that they've been hacked. I don't know if they've been hacked or not. Jose says, I tried DeepSeek briefly. It wasn't very good. I mean, I've not tried it because I thought now it's not even accessible, but I heard some good reviews around it. So good reviews in the, you know, if you're okay with the censorship. So of course, if you ask DeepSeek, so let's get into the brief history for others who are not aware what, you know, where this company suddenly came from. Actually, it's not sudden. So DeepSeek is a I think over the weekend, DeepSeek had released a reasoning model of from their reasoning model called R1, and which is like pretty good. And they had a mention, I mean, and they released their base LLM version somewhere in December, and now they released their R1 model. I think what caused the sell-off in the market was the DeepSeek claim that they spent $5.6 million in training the model, which was like mind-blowing. Even if your results are not that great, only $5.6 million. And here in the US, all the tech companies are spending hundreds of millions of training and billions and hundreds of billions of dollars on infrastructure. Hey, 2024, combining all the hyperscalers, they're spending what, $240 billion. In 2025, Meta has told they're gonna spend $65 billion in capex. Microsoft has told that they're good for $80 billion in capex. Right now, you add Google, Amazon, Oracle, we'll be spending close to $300 billion. Of course, not all is going to AI, but still, compared with 5.6 million, I think that's the one which was what just shocked the the market, saying it means if anyone can come in and disrupt these big tech companies, a small unknown outfit called DeepSeek can come and disrupt, then there is no moat. Then why do I need expensive NVIDIA chips? They figured a way to do this training without the expensive NVIDIA chips. That's why NVIDIA fell down the most. It was down like 17%. So basically that's what caused all the turmoil in the market, and anything that is related to the chips, they fell down, right? You talk of all let's look at overall the SMH semiconductor ETF, SMH, right? It had a big sell-off on Monday from almost 267 all the way to, at the lowest was 230. So that was a major concern. And it, like I said, DeepSeek claimed they only do $5.6 million. I think then later on, folks started looking at, and they have actually open sourced their model. So you can go and download their code. You can go and also review their technical paper. And they have used some of the technologies which are not new, but I think they've used in a novel way to make the reasoning and inferencing much, much faster. So that was the whole, the idea or the episode of this DeepSeek. Now, I have some different thoughts, but let me first go through the comments and see what you guys are saying. Sam is saying CNBC said DeepSeek still stockpiled top NVIDIA before sanctions. Possible. I will talk about it. One of the point that I have is around this one. Fred says, I tested against others about the same. There are videos out there where TMC shipped many of the latest NVIDIAs to China. The box is, I think, the same. It is, the thing is it good enough for the price, which is 5.6 million compared to OpenAI $100 million? I don't think that we are comparing apples to apples, right? So let me see any other comment to actually believe them. Yeah, that's a big question. That means they are far much less investment energy and chips. That's exactly what we saw. If you can create these models with much less, it's such a cheap price, you don't need those energy, you don't need those chips, and all those energy stocks, those nuclear energy stocks, which were darlings of the last year, also fell down. I think some fell. Was it Oklo? No, which is the one Vistra Energy. It had a huge sell-off. So let's look at that. And I have a few points. When has the Chinese government told the truth? Yeah, this is actually not coming from Chinese government. I mean, basically, it's a privately independent company in quotes, right? So here's my thought on this. I'll go through some of the comments later. So first of all, when they talk about that 5.6 million for training, that's not entirely accurate. There is some truth to it. There is a nuance to it, right? So that was a cost for which using which what they built their earlier base model V3. But before they incurred this cost, they had optimized their hardware and software a lot, right? They had to build up the infrastructure and then they had to optimize to the bones, all the way. Instead of using, let's say, if they're using NVIDIA, instead of using, let's say, CUDA, they might have used directly assembly language to remove one layer. Whatever they did, they had done tons of optimizations. Now, once that optimization was done, then the cost was $5.6 million. Right? But then we are not comparing apples to apples, right? You also have to include the cost of all the optimizations, procurement, engineers, hardware and all that, right? So that was a little, I would say, misleading, right? For the version R1, which scared the hell out of a tech, there is no cost info available, right? They have not published the details of, how you can duplicate or replicate this. So we really don't know how much did it cost for R1. DeepSeek says it used 2048 AI accelerators, right? But I don't know if it is true or not. If you look into NVIDIA's 15% of revenue actually come into Singapore. Pick up NVIDIA's 10K. You probably not see this in the earnings press release, but you pick up its 10K and look at the geographical distribution of the revenue. 15% revenue, between 15 to 20% comes from Singapore. I don't know of any big AI company in Singapore. Right. There is a company in France, Mistral, I know. I don't know any big AI company from Singapore, guys. So eventually we know where all those chips are ending, where they're finally going. And of course, I think it was in Bloomberg or was it in Wall Street Journal? It's been a few months since I read it's a very well smuggling process or route established of getting the chips, the chips which are under export sanctions to China, through tourists, through students, through other folks who are moving between from here to Hong Kong or to China or to Singapore. So there was a whole investigation done by one of these either Wall Street or Bloomberg. I forgot where I read that. So we know some of how these things work. They also, if you are using DeepSeek APIs, the price that they charge you for per million token is almost 30 times cheaper than what OpenAI charges, right? But then we don't know how much of this being subsidized from the government. So OpenAI is not getting any subsidy from US government, but we don't know. DeepSeek is charging you, maybe they are getting subsidy, or maybe it is an outfit of a government, so they don't really care about any profits, right? So I don't think, we can pay too much attention to this. They have sacrificed a little bit of a quality for the lower processing need, which was a wise decision. So you don't always need a Ferrari to travel. If you can live with little less quality but much cheaper and much faster output, why not? Other thing you need to understand is DeepSeek is an outgrowth or a subsidy. I don't know how exactly the relationship is, but there is another company called High Flyer. It's a quant hedge fund, just like Renaissance Technologies of US. So that's a quant hedge fund. And the story behind DeepSeek is that the CEO of that quant hedge fund, he wanted to basically use AI to do algorithmic trading for his quant fund, and then he decided, why not focus on creating a general purpose AI. So this is like 2 or 3 years ago. He hired a bunch of smart engineers, maybe close to 200 engineers, and then they released this. Now, because they're a hedge fund, I mean, maybe the hedge fund has shorted all the US shares and then they release this information. We don't know how much truth in this, but if it is true, I would say that was the best trade of the decade. Right? There is little confusion because I heard on DeepSeek whether it's built on Llama or OpenAI. I guess the V3 version was on OpenAI. Maybe the R1 is using the open source Llama, but it's not really fully ground up. And you can see some videos around on YouTube when some of the folks have tried it. It is actually distilling the output which is coming from one of these base models and then showing you after censoring, running all the censored stuff. Let's say it will, if you ask for a Tiananmen Square or what happened there, it will say, you can't answer that question. Or anything around negative news around China, it will hide it, won't show it. So it's not really, basically, when it comes from, if they have used OpenAI, it is a, I would say, violation of the terms of a use. And I think that's why Sam Altman say, hey, they stole from us and all the stuff. But we have to give it to them. I mean, they got some of the techniques that they have used. And I'm not too deep into, all that AI stuff when it comes to the technology side. But I did hear on some of the podcasts on the YouTube, some of the techniques that they've used, you have to give credit to them. Again, at the end of the day, necessity is mother of invention. If they don't have exactly the same chip power or a firepower which US companies have, they'll figure their way around. And which is what they did. They did hell lot of an optimization. Instead of using 32 floating point, I think they've used some 8 floating point in some logic and all that stuff. Again, I don't know the details, but you have to give it to them. That they have shown that, push to the corner, human brains will find, better ways and we'll figure it out. Basically, we'll figure it out. Right? And that's what DeepSeek has shown. So whether it costs $5.6 million, I think now after 4 or 5 days, I don't think anyone in the market believes that it took them only $5.6 million. So that's not a big question. But I think the bigger question is, guys, US, I mean, we used to think that US is far ahead when it comes to the AI. Probably not. Some of the other companies in the competitive nations like China are not a year behind. They may be a few months behind us. I think that is a bigger issue that we need to focus on and not get caught up by, hey, it's a $5.6 million versus $100 million. Because $5.6 million, no one now believes that number anymore. So, but yeah, I mean, this was like suddenly, what do you call as a, like, no, I won't call it exactly black swan, but something similar to that. And the market fell down 5%, 6%, especially at the index level, and individual companies were down 20%. I mean, I own some companies that were down like more than 20%, right? So yeah, but you need to dig deeper to see how much is it just fear and how much is actual truth, and then you could have decided, whether you want to take advantage of that sell-off in the market. Let me read some more comments. Jose is saying DeepSeek is mainly just a form of economic warfare. Yeah, open sourcing devalues OpenAI's model. That is true. I mean, that's what the Meta's plan is. They want to they have already open source Llama. Now they are not dependent only on Meta engineers to improve the product. Anyone can now work, and they will work to improve Llama, right? And then only thing that OpenAI will end up doing is basically their business model will be for the support services, right? If I can get DeepSeek much cheaper price, why would I want to pay licensing to OpenAI? Ross says India launched a rocket to the moon on peanuts budget, so why can't DeepSeek? Yeah, I mean, it's not $5.6 million, right? Because which is what they're claiming to be. And again, we don't know how much how much of it is true and how much of it is not. Most experts are, Asif says, most experts are agreeing that 5 million is most likely cost for last training run. Yeah, not entire. Yeah. Sam is stockpiling Chinese GPU. We already talked about it. Private company in China equal to Chinese government. Jack Ma. There is nothing private. There is nothing private in China. Asif is saying irony is that all these GPUs are manufactured in Taiwan, which China claims to be their own land. Okay, let's not go over there. We will have much bigger problems if China actually takes over Taiwan, right? We will have a much bigger problems. But yeah, it's all manufactured by TSMC. OpenAI is pretty much a sanctioned by US government. Look, who's on board. There's a beef happening between Sam Altman and Elon Musk. So, but we'll see where it end up. And I think Microsoft is also like, yeah, whatever, we paid them, but they don't not putting any more or little hesitant to put more investment into OpenAI in the Stargate. That's why they're perfectly okay for OpenAI to go and raise funds from SoftBank, right? Now SoftBank, what I heard, is investing a few billions of dollars in OpenAI, and Microsoft is not doing anymore. And that was one concern which I had on Microsoft, was their relationship with OpenAI, because whatever open with OpenAI will rub on Microsoft. But now at least I'm happy to see that Satya Nadella, he is like, hey, I'm not going all in OpenAI, right? Not all in yet. So in other words, they have made gas cheaper. People are going to drive a lot more any less. So that's a positive thing, right? You open source it, you make it cheaper. And if you're at Twitter, you would see a comment called, what's called Chivonos. Gosh, I forgot the term. So there is a specific term which says if your cost of goods goes down, then a lot more people will be able to find a better, more use cases, and eventually your consumption will grow exponentially and benefiting you. You're not making on a unit price, but actually you end up making a lot more on the volumes, right? This is what computers did. Computers, when the price started to go down, who thought, when it go back to 1950s, 60s, why do we need a computer at home? It's a business machine. But once the price when it became cheaper, we figured out a lot of use for why to use computer at home. We're doing that for internet. We'll do it for every technology. So if the price of the AI models come down, there will be an explosion of the AI technologies. Everyone on our phone will have our own AI agents running. And I think that's will be very good from our perspective. And that's why if you look at on that day, the Apple shares went higher. Why? Because if AI becomes prevalent, who has got the biggest distribution? Apple. And now everyone in the market started to think, my God, Tim Cook was smart that he did not spend billions of dollars in building base LLM models or AI models, because it's a eventually it'll become a commodity. I mean, I believe that LLM models will become commodity. Right? Just that the base technology has always become commodity. I mean, when electricity first came out, the biggest companies on the stock exchanges would have been, Edison or GE. That time it was not called GE. And then slowly the value moved from the infrastructure towards the applications where we could have used that electricity. Oh, it always happened that way. So for a few years, LLM companies that are building base LLM models are the darlings right now. and the value will accrue towards the companies that are actually using LLMs, distributing AI models, or building a products on top of those AI models. We have seen that during internet, exact same stuff. Nodal networks, Lucent Technologies, all the telecommunication companies which are laying the cable work, which are building the infrastructure to run the internet were the darlings. And then the value moved from the infrastructure over to the application. And eventually they'll move to where the consumers are. So we are in a very early phase, and that's what we see a lot of these LLM model companies are valued at crazy valuations, but eventually it will move towards the application. And I think that's why when every other AI company fell down, Apple stock was higher, because then say, oh, not only Tim Cook has saved billions of dollars in not focusing in building its own LLM models, which is a race towards bottom, but if we can make these AI models so cheap and they can run on normal chips. You don't need big NVIDIA chips. Everyone on their phones will have it. And guess who's got the best way? 2 billion devices of Apple are active in the world. And I think that's what Apple stock was higher. So, but I mean, it's pretty, I would say it's a great news for technology. Sachin says, I'm sure MSFT will be building their own model quickly, not relying completely on open AI model for long. Yeah, again, I think there will be some companies who might just focus on this one. And if MSFT, Microsoft wants to go there, that's fine. But why would you? Microsoft is gonna, they probably will become, I think they might just become a distribution platform for whatever is the type of LLM you want to use. We have everything available. I think on Monday the news came out, and then by Tuesday or by Wednesday, you could actually use the DeepSeek on Azure. Since it is open source, Microsoft picked up their DeepSeek and then have it available for anyone who wants to use DeepSeek. Now the question is, if I don't know what the pricing etc. is, but Microsoft is not in the married to OpenAI. They're like, yeah, we'll offer you DeepSeek if you want to. Sachin is saying AI models are new browsers. Yeah, exactly. There won't be much of a difference. I mean, it will become a commodity, which means no differentiation. You are just fighting on the pricing, and that's a game which I don't want to fight. You don't have any branding. It's just when it is a pricing, it's a race to the bottom. Right? And not just DeepSeek. And I think on Tuesday, or was it Tuesday or was it Monday evening itself, Alibaba had released their newer version of AI model. And I'm not going to get into detail. I did not look into this. And then they share their results. This reddish orange is Qwen, which is Alibaba's model. And looks like that performed really, really nice. So again, I think the bigger lesson here is US companies don't have 6 months lead or 1 year worth of a lead against other companies. Forget about that. So we have to constantly keep innovating and keep running if we want to stay ahead of other companies. And unfortunately, in this case, all the other competitive companies are in a nation which we consider as a enemy, right? Non-friendly nation. Let's not call it enemy, but it's a non-friendly nation. And I think that's a bigger concern, which political as well as economic concern that we have. But it was good to see, some activity suddenly in the market which no one had expected. Will Microsoft buy TikTok? I have no idea. I have no inside information. There are many suitors in this play. I heard even that AI company, Perplexity, They are bidding for TikTok. So you don't know who eventually TikTok will end up with. But we'll see. We'll see. All right. What else? Anything else on DeepSeek? Cool. So let's address some of the questions that I received from you guys in our last week's session. One was around 351. I think a couple of you had asked for. So 351 exchange is basically if you have a concentrated equity position, you want to diversify your holdings. One way you have to sell your holdings, but then you have to pay capital gains tax. There is a process called 351. I'm not sure it's called exchange or not, but it's a 351 in which you give your concentrated position to a fund manager. And then there are some conditions, and then you basically receive from them a different stock and not your original stock. And hence, you are able to diversify your portfolio. And when you hand over your stocks to the fund manager, it is not considered as a sale. So you don't end up paying capital gains tax. So I'm not going to get into the details of this. I already covered it in session 230. And it starts, pretty at this timeline. If you don't want to, you want to skip through other, but I looked at it at around this timeline is where I actually start discussing the, yeah, so I think this is where we covered. I had put it on YouTube. So basically the topic is how do rich stock owners avoid paying capital gains by exchanging their shares. So there are something called, or if you Google for exchange funds, right, you will see this. I think Morgan Stanley has one. There are a few companies which are in this business. I think Ares investment firm that is in this business. It's called exchange fund or swap fund. There are some lock-ins, etc. There are some conditions under which IRS will allow you to do this. So a couple of you had asked for this one. So this is the info. Other stuff. Some of you asked for a quick glance at companies. Sridhar, do we have Sridhar today? Sridhar, you there? If he's not, okay, he's there. All right, so let's look at NTRA. And again, I don't own this company. I never bought this company, never looked into the company. But briefly, and let me just. So what I'm going to do is just look at from a financial perspective. Any investment that anyone wants to do has to be based on two things: numbers and the story. There are companies that have done, their stock has done great just on the stories, right? And there are companies whose stocks have done great because they had a solid numbers to back with. Now, I don't know the story behind NTRA. So Sridhar, that if you're interested in it, you need to figure out why you want to invest in it. It's a company that produces, I think, equipments for some molecular testing and all that stuff. Now, what's the story behind it, where the stock is trading, where it is, that you need to figure out. Let me look at the numbers and see what I see. So looking at the numbers, no earnings, so P ratio is 0, forward P is obviously nothing. It's got a revenue of $1.53 billion, trailing 12 months, and a loss of close to $215 million. Got a good, close to a $900 million on their cash. So they got a good runway, and they will need a lot of runway because it's not making any money. So they need to have that runway. And $475 million of debt. So overall, not much difference between market cap as enterprise value. Nothing that strike out here, just that it's an unprofitable company, at least late trading 12 months. So now I want to go back and look at 1 year, 3 year, 5 year, 10 year. I think it's been public for maybe 10 years, 11 years. So there are some things which I look if I want to to know if this is a great business to own or not. Not great stock yet. I don't know about stock, but is it a great business to own or not? So a few things I look for: how good moat it has. Gross margins are fine, not too shabby, but looks like they continue to invest a lot to protect that gross margin. So I don't know how big that moat is, right? Capital allocation, pretty bad. I mean, they are not even in this phase. So to me, it looks like, is NTRA a startup? Because the financials suggest that it is behaving like a startup. It's behaving like a company that is not yet at a place where they can think about profitability or doing business or running the business in a profitable manner, returning capital to shareholder, etc. And that is fine. Some companies just want to focus in earlier life cycle. They just want to focus on the growth, growing revenue like crazy. Right? I don't see that crazy revenue here. Yeah, operating margin bad, profit margin bad. That's fine. But are you growing? They're not growing either. Last 10-year CAGR is 9%. Last 1 year it grew only 6%, 12%. So which is now a little concerning to me is you're not growing, you're not making any money. What the heck are you doing? So no cash flow. So you can ignore everything. Cash flow generate, doesn't generate. It is a little capital intensive, not too much. But I really don't like the company at which it is, the stage at which it currently is. Right? Maybe it is at a pre-product stage wherein they're just trying to still figure out their product market fit or trying to figure out whom to sell their products to. Are they in the market exploration stage? And that's why the revenue is not growing, but they have been in business for at least 10 years. So that's something you need to look at. And there are many biotech companies, and this is not exactly a biotech, right? But I've seen many biotech companies because in similar shape, because their job is to find a new vaccine or new molecular, and then a pharma company will buy them. That's their business model. I don't know if you know the story behind this, then maybe take some position. But looking at the numbers, I'm not willing to take any position in this one because I don't know the story behind it. Now, only reason why I would someone can justify investing in this would be, hey, look at this story, which I'm not aware of. Okay. So that's NTRA. Second one was ISRG. Serena here. Nope. Serena, you. All right, I'll skip ISRG then, unless someone else is interested in ISRG. I don't want to waste you guys' time. Okay, Shri says he is interested. Anyone else? All right, let's talk about ISRG. Gonna look into the ISRG in similar fashion. First, look at some of the financial metrics. PE, pretty expensive, right? But maybe it might be a great company, maybe growing a lot. So I'm looking at a forward PE because PE is your, looking into a rear view what has happened. So let's look at what the analysts are projecting for the next year. 71, still expensive. It's not cheap. So first of all, it's not a cheap company. But you could have an argument that, hey, Vivek, the company that grows crazy, you'll never find them cheap, which is true. But then if you look at a PEG ratio, it is expensive even from that perspective. PEG ratio basically will normalize for your growth, right? It is trading expensive even from that perspective also, right? $8.35 billion revenue, net income 2.32, which is great, close to 25% net profit margin, right? No debt. Great, right? Very, very strong balance sheet. No chance of bankruptcy because they don't have any debt. $8 billion in cash, right? And it's close to $203 billion market cap. And what else? 52-week high was 616, low was 364, close to 13,000 employees. So it's a pretty big company. So this is a company which seems to be in a phase which I would say not growth, but between growth and mature. This is a company which is focused on generating, revenue profitably. So now I can look at, okay, let me look at how great the business is, right? Good gross margins, return on invested capital, at least not negative. I mean, I would love it to be 15%, 20% higher, the better, but not too shabby. They've been buying back some shares, and yeah, but not too much. Operating margins are decent, right? Close to, I would say, high 20s. This is pretty decent. And same as the net profit margin. So no accounting gimmicks between. So whatever their business is what their net profit is. Right? No equity investments, etc. to which will change. Not big of a treasury operations. No government regulatory credits, etc. However, whichever way, your core business, everything falls down to your net profit. So which I like. That pretty simple P&L statement to understand. Now revenue growing at, I would say, mid-teens to high teens, right? 3-year CAGR is 18%, 14%, 15%, which is fine because it is already at a base of $8 billion revenue. It's not like a $1 million or tens of $1 million company which can grow on 50%. And the EPS growing pretty nicely. It is a little capital intensive, and because the kind of business it is in, it has got its own manufacturing plants. If not its own, I think they also outsource some of the stuff. And it is dealing in a hardware stuff. It's dealing in surgical robots. So this needs those machinery, etc. So it is a little capital intensive, but that's the nature of business it is in. Free cash flow, close to $1 billion free cash flow. But if I look at a stock-based compensation and subtract that, picture is not that great as $1 billion, right? So on an average, between close to $600 million free cash flow, if I remove the stock-based compensation from there. So it's a good business, right? It's a mature business, not going to grow at 40%, 50%. It is a mature business, got some decent moat around the business, is able to generate, and it is a profitable business, able to generate some decent margins. Now the question is, what are you willing to pay for it? To me right now, it looks to be pretty expensive. If I were looking for, if I were to invest in ISRG, either I'm going to have a very small position so that it stays on my radar, or I would want to wait for decent pricing to buy the stock. And from a business side, I don't have any concern. From a stock pricing perspective, I do have a concern that what's being priced in business is not as great as what the stock price suggests it to be. Right? So that's my thesis on ISRG. So long term, I think, I mean, you won't go wrong by buying this business for a long term. Just that I don't like the pricing right now. Any other questions? Owner is saying the problem with ISRG is that the growth is limited by the number of people in surgery, and those number of people going in surgery continues to increase. And also, even, you could replace, you don't need a huge number of growth in people who are going to surgery. You could actually still be able to replace the current operations that are being done by surgeons, they could actually use ISRG machines to do it. Now, going back to the what paradox again, forgot, Givon's paradox? Yeah, Givon's paradox. If they can make these machines much cheaper, we could see these machines used a lot more in the developing countries or underdeveloping countries. Let's say, Africa, let's say third world countries. Now, where they may not have access to the good surgeons, but the surgeons can actually operate it remotely. Not a too far-fetched scenario to think about. Then you make it much easier. Easier means to reduce the cost of your surgery per surgery, because now you invested on a machine and you don't need, you don't need to have your surgeons available or with your hospital. They can be remoted operately and all that stuff. But I think we are far away from that yet. But it's a good business. I have a concern on the price that it is currently trading at. Is there a price at which you'd like to buy this? A company continues the same financials. I actually did not look into what the pricing be, because I'm not looking to add a new stock to my portfolio, not specifically in this area. So I did not look into this one. Okay, so Jose has told, wait for a pullback, bounce of 100 MA. Oh, what's this 100 MA is? See, so this is 50 MA, and I guess 100 MA is close to what, 520-ish or something right now. And this is 200 MA is 477. Okay, you will not get companies with a good mode cheap. Right? So don't wait for the bottom, don't try to bottom fish. Right? But to me, it looks like, and I think when I did it, it was like almost 600. Now it has corrected a bit, but I think still it is expensive. Right? So that's ISRG. Any other questions? All right, so let's talk about next week. Again, earnings coming next week. What do we have? I'll be on a lot of companies that I hold and I'm interested in are reporting earnings. Monday after close, we got retail investors' favorite, Palantir, and should see how they perform. So we got Palantir on Monday, and then what we had to do, we got a PayPal Tuesday. I'll be looking into this. A Tuesday after close, we got an Alphabet. Then Wednesday, we got a Uber. What else? Okay, Wednesday a little light. Good. I can breathe. Then we got Thursday is Amazon, Pinterest, and a couple of them which don't show up here is Alibaba and Doximity. Yeah, so gonna be a pretty busy week.
I have a question.
Sure.
Do you ever trade earnings, like more short-term stuff, or do you ever do that? Or
No, I have traded, but like once in a while. I think I did a strangle on GM as
So you
a earnings trade.
yeah. So I was just curious, like, can you? I just put on something similar for Ford, but I'm just curious, like, what kind of trades you put on when you trade earnings and
So when I'm trying to trade earnings, first of all, I want to see, if I own the position or not. If I own the position, again, my idea when I'm trying to trade earnings is just a volatility play.
Yep.
Right. So because I don't know where the stock will go up or down, so I generally will have positions on both sides. And that position I can take it if it is a higher ticker stock, I'll probably do an iron condor. Right. I'll look at what's the market maker movement, expected movement is, which Thinkorswim will show you what's the MMM is. Go a little outside the MMN and pick up my short strike prices. So that's I'll trade earnings, and I'll do the trade just before earnings, right? Let's say if it is reporting earnings tomorrow, then I'll put the trade today so that all the volatility juice, all the volatility that have to be spiked up on earnings has now come in, and then I will do the trade. And the idea is, I'll pick up the latest, the closest expiration period, because all I'm trying to do is to play for that volatility crush after the earnings. So
you're basically selling options and
yes,
then
I'll sell
waiting for the volatility to peak and then selling options
Correct.
outside the range so you can just capture that.
Correct. So
Okay.
we'll look at it every time. The volatility will always decrease. The stock could go up or down.
Yeah.
Earnings, in this case, after earnings, the share went down, vol went down. In this case, after earnings, stock went up,
Yeah.
but the vol went down.
Okay.
Right. So one thing which happens after every earnings is, let me delete this. The volatility crush will happen.
Yep.
And essentially that means if I sold options, look at here, and that's what I want to play.
When you sell options, how do you manage it when they kind of go like I tried selling covered calls on one of my positions last week, and when the deep sea thing came out and the market started going down, and then it kind of went in the opposite direction after a little while, and I kind of got scared and closed it because I didn't actually want to sell the shares.
Yeah.
Like
So
how do you manage this?
yeah, I mean, there are different flavors of covered call that I will do. Again, I think I've covered it in one of the bootcamp sessions. Is like if I own only 100 shares, then instead of a covered call, I might do a spread. If I own 400 shares, I might just do 1 or 2 covered calls, so that if the stock bounce back and rip me on the other side, at least I'll still be in the game. So there are or if I'll start to manage it. If it goes, let's say, start to challenge my call side, I might put up on a put side trade. So that I covered in how you manage your option trades. So there are ways on strategies, different strategy I will use for a different type of a stock, right? If it is a very volatile stock, then I will not go for just a short call. I will always go for a call spread, because some of the stocks can go up 20% in a day, 50% in a day, and I don't want to be then kind of so a lot of the market is very early. In that case, I will do a call spread instead of doing just a call. So call it as a covered call spread.
Got you.
All right, so yeah, a bunch of earnings. So I will review these earnings, and we'll talk about some of these. I don't think we'll be discussing all of them, but for sure we'll talk about the favorite retail favorite Palantir, Google, Uber, Amazon, maybe Pinterest, or probably one more. Yeah, 4 or 5.
And we cover AMD also.
AMD when it's okay. Okay, so I'll bring you AM because I don't own AMD. Have not done a kind of in-depth study on AMD, but I'll bring up the numbers. We can talk about the numbers on AMD. Okay. All right, a quick look at the crypto economy. A chart I saw, which was a good chart. I mean, putting it in this fashion. Will DJT will it break a 4-year cycle? Right. So starting from 2020. So basically, I think all the numbers with a shaded background tells you what's the yearly performance of Bitcoin is. And so what we're generally seeing that after halving, so Bitcoin has started moved a 4-year cycle. So and then we had a pullback. So 3 years of gains, pull back, 3 years of gains, pull back, 3 years of gain, pull back. Now the question is, hey, will DJT will change it? We don't know. But no. More interesting thing was to actually put it in this perspective and see that you could actually see that there have always been some pullbacks. Right? The cycle repeat. But come on, it's got a history of only 15 years. So I don't know how much to depend on this one. But anyway, interesting chart. Other interesting chart is around this one, which is what I'm more focused on. is a state-by-state race for Bitcoin strategic reserve. I think I had some illustration around it. Yeah, how did I miss this? States status for strategic stockpile. Don't you like my alliteration? All right. So this actually gives you a visual representation of, I think, couple of states are now in approval, going through the motions of our legislature. If any bill has to become a law, they are raised up to House and Senate approval. All others, I think in Alabama, Florida, the bill has been introduced. Many of them have their committee approved. So we should, again, I'm not sure, and I'm not holding my horses, assuming that these states will approve it, but it's a good to watch. Maybe the states will move ahead of the federal. That'd be an interesting thing, right? So that's all, and I have not looked at any other crypto. So, but how is crypto doing? Where is crypto's market cap right now? IBIT continues to work fine. I mean, I closed another strangle on. I think this week I closed 2 strangles on IBIT, and I added 1 strangle and 1 covered call on IBIT this week. IBIT is a so far it's been out there for what, 11-12 weeks only, but or maybe 10 weeks. But it's been a great instrument to trade options on it. So I'm more focused on IBIT. Yeah, I don't. Okay.
I think Bitcoin's gonna make another leg up and get to like, this is just my opinion, but I'm super into it. Like go to like 120, 130, and then I think it's gonna crash down to 50. I don't think it's like last cycle, everyone was like, oh, it's going to 200K. You know what I mean? Everybody promised the moon, and then like went to 69. So it's like, yeah, I wouldn't make the same mistake twice, you know?
So I don't think it, from my perspective, I think crashing down to 50K may or may not happen, because now the players in the markets are very different. A lot of retail players are not participated. I mean, a lot of institutional players are in it now, which is like,
but
many of them could be just buy and hold.
Yeah, I mean, but institutions can also rug pull, right? Like it's very concentrated.
But generally, the market becomes less volatile once you have. I mean, if you look at the BTC volatility, it has actually come down over years. But will it hit 250K, 125K, 150K? I've seen many numbers. All I'm looking at it at a higher macro level, a lot of positive stuff we saw in Tesla. I'm going to talk about Tesla earnings. We will see. Let me pick up just one point from a Tesla earnings. So after the accounting board, the change on how you account for your Bitcoin on your reserves, Tesla reported $600 million of profit from their Bitcoin holdings. And now other company, Block, has got it. MicroStrategy has got it. All of them were sitting on losses, not losses, but impairment charges that they had to do. Now starting 2025, all of them have to do the mark to market of Bitcoin. So you should see all of them reporting some decent gains on their Bitcoin holdings. SAB 121, SEC has rescinded its order. That's a huge stuff. Now the banks will be allowed to participate and maybe hold Bitcoin.
So the FASB rules the new FASB rules come into play for the like which year? When did they actually come into play, like for the reporting?
Voluntarily, companies could have started doing it last year. Starting 2025, it is mandatory that you have to treat Bitcoin as any other assets. Prior to that, it was categorized as a speculative asset, so different rules applied.
So it's not, hasn't been actually like which company? Because if that's the case, then wouldn't MicroStrategy's balance sheet completely change too? Like.
So depend on MicroStrategy has got a different stuff, right? Because they've been buying the Bitcoin all through, so they have a gains as well as could have losses. I don't know about Micro, but I know about Tesla bought it 4 years ago, and only thing that they could have done on their P&L is to just record the impairment charges, or AKA losses. Bitcoin went up from wherever Tesla bought to 100K. They couldn't show any gain out of it in any of these
Yeah.
quarterly results. This time, because in 2025 new FASB rule, they reported $600 million of gains. Imagine
just did
$1
that.
billion of investment, $600 million of gains.
They just did that for the first quarter only. That was the
First
first time.
quarter, yes. So no, they reported in their Q4.
Okay.
So some companies have started to voluntarily move towards this starting in 2024 after FASB gave them the guidance. But I think it's mandatory to go it from 2025 onwards.
Okay.
Yeah. So there are macro level things that are happening. So, once you get your banks and all of that, and I think Fed, didn't Chairman Powell said in one of our response to one of our questions that if banks wants to engage in crypto, yeah, they are allowed to as long as they manage their risk.
Yeah, I
Which
mean,
is like
that's
very
like,
different from what we've been hearing from
Yeah,
regulators so
for
far.
sure. No, I mean, I'm 100% like I know all about all the tailwinds or whatever, like, but like I've already been traumatized once, so it's like, once bitten, twice shy. Because
Yeah,
it's
that's fine.
always something you don't know about, and then they just pull it out. Like last time, again, like I bought at the top last cycle because I was so excited about it, and then the rug got pulled. So it's like I wouldn't be and the thing too is like you have to look at the overall macro, right? If macro tanks the overall market, I'm not saying it will, but at some point this year it may happen. That's gonna end the crypto cycle because it's risk on, like
True. I mean, it is still a part of it. Crypto is still a part of your risky part of your portfolio. So I'm not gonna go and put my food money on it.
yeah, it's not gonna survive like a bear market. That's all I'm saying.
Yeah.
In the greater market.
Agree. All right. So what did I buy or sell this week? So I bought TSM, ANET, NVIDIA, and Microsoft. I bought it after they reported their earnings. Again, don't go and follow me, but I want to be transparent on my activities of, these are all the stock buys. Didn't sell anything this week. Cool. Quick look at a portfolio pizza. You'll see another pizza at the first session after the month end of February. So this is how the long stock positions look like at the end of Jan. SPY is still the biggest part of my portfolio, right? Next is a Mercado Libre, Meta Platform, ACSD, Google, Microsoft, cash has come down because I did utilize some cash to buy the stuff. Apple, QQQ, Amazon, Shopify, Berkshire, IWM, NVIDIA, ASML. No change between the data. Of course, the percentages have changed, but leaderboard, no change between what I shared in December and now how it ended up in the end of January. So give you a few seconds to look at it. If you have any questions, ask me. I'll sip water and then we will talk about earnings. We got 30 minutes to go, and we'll look into that. Will be the last part of our today's session. Look into some earnings. All good. All right, let's move on. So let's talk about some earnings. Let's look at Microsoft first. Okay. So stock was down 6%. After earnings, what happened? Revenue was up 12%, close to $69 billion. Gross profits up, margins were better year over year. Operating income was up 17%. Margin was better, 45.46%. Net income was up 11%. Cash flow up 18%. EPS was better. All numbers good. What happened to the stock? Azure, which is where a lot of valuation of Microsoft is, grew 31%. Right? But their guidance was 31 to 32%. Okay, I had a typo there. So generally, Microsoft, whenever they gave their guidance, they actually hit the top end of their guidance. So market was pricing in maybe they will do 31.8% because the range that they had given last quarter was 31 to 32%, but now they came up at 31%. Dude, come on, 31% is not bad, but you know how the market works. Market works the way it works. Oh, you did not, instead of 32%, you did 31%. So that was the one concern. And if we listen to the calls, CFO Amy Wood mentioned that this is attributed to the slowness on their partner channel side. And that's why they grew only 31%. I was saying only 31% in course. 31% growth is good. CapEx was $22.6 billion, which was above analyst estimate. And your intelligent cloud business, which is include everything else, was down 1.5%. So slower growth than anticipated in Azure and higher CapEx. Market didn't like it, stock sold off. But all is not that bad. AI revenue, cloud revenue grew 157%. Right? So of course, Microsoft has got revenue coming from OpenAI, which is their AI revenue. They got a lot, other your Azure and your other cloud revenues, your Office 365 and all that stuff. AI services revenue surpassed $13 billion in run rate for the first time. So it means at least in this quarter, they have done at least $3 billion in AI revenue. And then the commercial bookings increased 67%, which is the best growth in a decade. So not everything was bad. I mean, only thing that was not good in the market was, instead of 30, you told me 31 to 32%, you grew only 31% in Azure, right? So looking at various business segment breakdown, cloud revenue was 21%. They returned $9.7 billion to shareholders via buyback and dividend. Azure has been growing, I would say, last few quarters, close to 31%. So not that bad, I would say. Anyway, next guidance. They gave a guidance of Azure to grow between 31 to 32%. Market was expecting 33%. So what is now market thinking is, gosh, their Azure growth is slowing down. I don't like this company. But long-term trend, if I look at it, to me, it's not growing at 20% plus rate, but I think still the overall revenue, still growing at 12, 13, 10-year CAGR is like 10%. Of course, the Azure part is growing much faster, but it's a huge, big company. You can't continue to grow at 20% plus. So yeah, I'm not too concerned about it yet, except that OpenAI stuff, which I think Satya he's not going blindly into it and is okay with other people put money in OpenAI. Then I think to me it looks fine. So when the stock fell down 6%, I thought maybe I'll buy something. So that's why I bought Microsoft after earnings. Cool. Again, these stocks are sometimes priced for perfection. So little bit, few basis points here or there, market go crazy. Any questions on Microsoft? These are at a top level. I looked into
So
Microsoft.
what is the fair price? Vivek, do you calculate fair price of the Microsoft? Only
No.
book value or something, or it doesn't matter to you?
I don't go into that, because for me the pricing is what. So what I do look into it is how expensive. If it is expensive, then how expensive it is. If it is egregiously expensive, I might just wait. But if it's not, I'll buy it. What is okay? Let me ask a question. How do you even define a fair price? Let's engage into this intellectual discussion. What do you define a fair price?
Fair price is like if revenue is not going up, so whatever the revenues coming into the next 2 years projection are, why the analysts are saying price target 550. They will be saying something with some numbers, right? So when I calculate the revenue projections like is going up year to year 10% consistently, then the market if revenue and the profit margins are stays same, then the numbers are right. If the numbers are not same, then definitely stock was already priced in and it will go for correction.
So you say revenue, if it is revenue is not growing, and based on what the analyst said projection, let's say company doesn't have to. What if the company doesn't have to grow the revenue? Apple revenue is not growing.
That's the reason market priced in, and it's Apple sell off. Apple was a fake pump on Friday. and they went to 245 and then again came back to 233. The fair
Oh,
value of Apple is $200.
oh, I'm not talking about just on Friday, right? Apple still is one of the biggest company and the revenue. So revenue is growth is fine, but revenue is not the only consideration. So reason why I want to talk about this fair pricing is I don't care what the analysts have to say, because analyst, whether it's a sell side analyst or whether it is a buy side analyst, all of them have their own biases on trying to justify why they want to justify some stuff. You look at an analyst report, how many analysts actually give a sell recommendation? 80 to 90% of the recommendation coming from analysts are just buy. Doesn't mean all the companies are great. You say buy X, then you also say buy this competitor also. Right? But they have a different motivations. So what I want to look at it is, yeah, I can look at it and say, okay, how much am I paying for it? Will the company be able to sustain its from a free cash flow, what is being priced into it or not, right? And if I look at on a history, they have not been able to, or at least to be too far-fetched, right? Then I'll say, maybe I'll wait for it. I don't know. So when you can only find a fair value, pricing is determined by the market participants. I can put a $20 bill in an envelope and say the value of that envelope is $20, but someone is willing to pay me 25 for it, the price is 25. So I'm not a big fan of looking at price to book value, etc. But I do look at, is the business good? If the business is good, then I will see am I paying up for it? If I'm paying up extra for a good business, I'm okay with it as long as it is not egregiously expensive. I like Palantir business, but I don't like its pricing. And it has gone crazy. It is still, I mean, anything above 60, I didn't want to pay up for it. Now the stock is like 80 plus. Well, that's okay. Right. And if you look at a Palantir from a traditional PE or any of those, you would have never bought Palantir at the first time. But I look at, I like the business of it. But at some point of a time, I'm like, I don't want to pay for it. And market could continue want to pay for it. Maybe there are people who are richer than me. They say, you know what, for the $20 envelope, I'm ready to pay $30. Fine, go ahead, pay. I don't want to pay for it. I might pay for 20 or 22 because you got a signature on the envelope which has got more value, right? So everyone has to determine what the pricing they are comfortable paying for it. Well, market pricing will continue to change in the market. Pricing keeps on changing. Every tick basis, every second the price will change. So that's my thought. But I do look at, how much am I paying up for it? I learned my lesson in 2021 wherein, I said, hey, let's only pay up for, it's okay that it is expensive, but at some point of a time, it becomes overly expensive. 2021, some of the stocks were at that stage, but I wasn't that, I would say, well read as an investor. So you learn lessons. I paid my tuition fee. Jose says you can use PE ratio, look at technicals. PE ratio, you can just manipulate the PE ratio because PE ratio is an accounting earnings. Number one, it is backward looking. So you can't really use because that's tell you what has happened in the past. Number two, the earnings that is there is an accounting earnings. It doesn't tell you about operations. And those accounting earnings could get changed. Let's say if your company has an investment in another company, equity investment, even though it has nothing to do with its operation. Look at Tesla. Tesla earnings has improved by $600 million. It has nothing to do with Tesla business. So if you're looking at a PE, you really need to know what are the factors that are driving the E part of it. Otherwise, the PE could become misleading. Again, at the end of the day, PE is still, it's a pricing mechanism. Then you look at a PE, then you will say, what are the other companies willing to pay? Other competitors are trading. Are they trading a similar PE? Yeah, then I'll buy it because the market is now pricing it at the same stuff. Right? But if the market falls down, like it fell down in 2022, all the high PE all came crashed down together. So I don't look at, again, that's why I look at those, the quality business metrics, and then I figured out what I want to do. I don't have a one specific answer that I can give you. Okay, look at PE or look at free cash flow yield, look at price to book value. No, I mean, that's why I look at all that thing and then I'll decide on. Little bit of a science, little bit of an art. Let me put it that way. Ramesh says, Microsoft down, I sold put ready to buy at a discount. If not happy, I'll keep a premium. I was thinking to maybe sell I actually have a back ratio spread on Microsoft. And if the stock falls down a little bit, I'll probably it will hit the peak of my back ratio spread. I'll make some decent money on that option trade. And if goes further down 5-10%, I'll have to buy it at that point of time. I'll be ready to buy it even more. But I only bought very little on Microsoft after earnings. So how do you know it is expensive? I think we've already talked about it. All right, so that was Microsoft. So next one is Tesla. Let's talk about Tesla. So Tesla reported the results. Look at the financial metrics. Revenue was up 2%. Gross profit down, margin down, operating income down, operating margin down, net income was down 70%. Even with that $600 million benefit from Bitcoin, the net income is still down. Operating cash flow was up, EPS diluted is down, right? 600 million gains and still down, net income still down 70%. Numbers look bad. They missed on both the top line revenue as well as EPS. What happened to the stock? Pricing wise, stock great. Market priced the stock at at whatever 4%, 5% up. Right? Vehicles produced were down 7% year over year. Delivery was up 2% in this quarter. The silver lining in this bad report was that energy storage. And I think even in a previous quarter, we saw energy storage was up like 3 digits. So I think that, again, I've not looked into the details of it. It's energy over the past few quarters has been, that side of a business has been growing. The automobile side, the margins on automobile side, not that much. Eventually, it looks to be it's a car company. Look at the margins, looks to be it's a car company. Right? So, gross margin, 16% gross margin. Which software company has 16% gross margin? These are the margins of auto company, guys. Right? So, but stock was up, whatever, because it's a story stuff. Again, every investment has to have a numbers and the story. The story of Tesla is great because we have a great storyteller. We have a master storyteller in Elon Musk. And I think only he can open up or talk about this thing in an earnings call. So I dialed into the earnings call. No other CEO will do it. This is what Elon has to. Again, I'm paraphrasing it. Okay, I don't remember exactly the word, but it's on this line. It says, I think the Tesla can be the biggest, most valued company in the world. Not just the most valued, but bigger, more valued than the next 5 valued companies. No other CEO can come and talk about this. SEC will be behind it, but he can come and say whatever he wants to say because he is Elon Musk. That's how he opened. I think during early part of the call, that's what he made a statement. I'm like, what the heck is he saying? He's claiming that Tesla can one day become, again, it's a one day, right? You don't know. 50 years later, maybe it's a possibility. But no CEO will say these things. But hey, he's a great storyteller. And all the Tesla stock is right now based on what the story is that he's telling. And he told the story. He said the more affordable models we will start production in 2025, and he told CyberCap will be scheduled for the volume production in starting 2026 for a volume production. The other thing which he mentioned was in Austin in June, you will have a robo taxi running in Austin in June, in which you can actually hail a ride. I've been hearing robo taxi for last 4 years. Hopefully now in June we will get it. And then I think analysts asked him about how about others. Then someone asked for California. He slipped in, yeah, maybe we'll get California. Maybe by end of this year, we'll get in many regions of the US. You know how Elon Musk is. So it's all based on the story. Stock is where's Tesla stock trading right now? So if you look at the numbers, not good. But stock was up 2.87% the next day. But story, pretty good on Tesla. So if you like the story of Tesla, great. But many investors who focus on just the numbers have never invested in Tesla. And Tesla has been just from the stock perspective, has been a great stock over the years. But all has been based on the story of future. So when I started to look at it, try to bring in more story and understand what the story is. If we only focus on the number, we could just miss out Teslas. We could have missed out Amazons of the world. It was all story about how great the internet could be. Right? Many companies did not, Amazon did. So that's why now when I talk about or look at any company, I want to look at both sides. And then we talked about NTRA. I said, I don't know the story behind NTRA. I'm not saying NTRA is a bad company to invest in. Financials are bad. Numbers is only half part of it. If you know the story and story is compelling, you've done your due diligence on the story, yeah, go ahead. So that's Tesla. Any Jose says Tesla is a mega cap meme stock. Yeah, like it's a, that's a oxymoron. That is a mega cap, more than $1 trillion, and it behaves like a meme stock. Like Sam had to go take the blue pill, man. Take the blue pill. A lot of folks are now orange pilled. Jose, I would invest in Tesla like a VC investment in people, investing in Elon. Yeah, I don't bet against Elon. You shouldn't bet against Elon and keep it as a small part of a portfolio. I think every investment is fine. It's more on a position sizing. If you size your position properly, it's fine even if you got into the bad investment. It's a 0.5% of your portfolio. How does it matter? But if you like the story, yeah, maybe make it a 1% and then chill. Again, I'm not recommending it, but include story in your investment thesis and focus on position sizing rather than saying, I'm never going to touch it. Maybe say, you know what, I'll take a very small position because story is fine, numbers are not fine. Or the other way around, if the numbers are great and you don't like on the story, then you say, you know what, this company may not have any growth. I'll not probably increase my position. It's going to get it to mature. It's going to stay here. Or maybe start to divest. So you need to look at both. Asif is saying a friend who was labeling for Autopilot 2012, so the effort they put in FSD are real and hardcore. Results may come after a decade. Sure. And I think on an FSD side, maybe Tesla, all other companies like GM, etc., they might just license. That's another business line that we have not talked about. Right now, we are talking about Optimus and robo taxis. But how about if Tesla licenses the FSD to others? That's another source of revenue. But again, these are all things of future stories. They have to convert it to numbers. Let's talk about Meta. Meta is a company, great numbers. I mean, all green. Revenue up 20% to $48 billion. Right? These companies are like generating 160, $200 billion annual run rate and still grow at 20%. Then we talk about, oh, come on, this is concentrated. Why would I not pay up for these companies? Right? Forget about the P's, man. When you talk about the general P of the market is 16, no, we'll pay much higher for Meta. I'm not gonna go into the numbers. If you can just read through yourself, but overall everything looked great. From a business metrics perspective, advertising revenue is up 21. I mean, that's where the majority of the revenue comes from. This is what I want to focus on. Daily active people, 3.35 billion people. How many adults do we have on Earth? Less than 3.3, right? So they probably captured all the adults on Earth. They're already using that. And last quarter, when I looked at it, I'm like, they're already 3 billion, 3.1 or 3.2 somewhere. How much can they grow? And every quarter, they'll surprise me by growing. 5% is fine. You don't have more people. Even 5% is great. What I love is average revenue per person is growing at 16%. If you can grow the revenue side, then fine. Even if you don't get more people on your application, that's fine. Your revenue is still growing at a much better pace. Right? Their revenue grew 21%, operating income grew by 43%. Right? So that's a nice operating leverage. Overall, a great quarter. Guidance revenue giving again between 8 to 15%. I thought maybe after a DeepSeek, some of the CEO will tone down their capex. No, Zuck is not having anything of a DeepSeek. He's still gonna spend 60 to 65 billion dollar. What else? Average price per ad increased by 14% and 10 year over year, and that's amounts into directly into looks like ARPP. OpenAI models, Llama 4 is making real good progress, and he's also talking about AI engineering agent. So if you or your friends are in mid-level software engineer in Meta, gotta be careful. Gotta amp up your game, because he did talk about something called an AI engineer agent that they are working on. Not yet done. So what Zuck was saying is first they'll deploy in within Meta, and that agent can do a work of a mid-level software engineer. And then you know what's going to happen. And then they said could also offer it to other companies. I don't know if maybe that may not be open source, but they could offer it to other companies. You got an agent for you. So, but I guess everything. And he was pretty bullish about the AI, and his opinion was 2025 will be a year when the personalized AI will reach out to the billion people, and Meta will be the leader in this one. And if you listen into earnings call, is more bullish about which form factor. So over the last, since let's say 2007, 2009, till the last 15 years has been a year of mobile companies, right? The cell phones, the device of choice. What Zuck was saying, and again, that's his opinion, and of course he's got a stake in this one, is AI will be driven more through the glasses, and that's why he's still very bullish on their collaboration with Ray-Ban glasses, saying glasses is where we will see the adoption of AI, because then the AI agent will see and hear what you're exactly seeing, and so it will give you the right context, right? If that's the case, then who else is in the lead? It's a Meta. But Apple's Helmet Vision Pro hasn't really taken off. So bullish on Meta, the stock is at all-time high, but because the business has been performing. Overall financial material, look at a 3-year CAGR. All looks good, man. Nothing to worry about. So that's on Meta. The next one, ASML. So ASML is a company that supplies equipment to chip making companies, to equipment to TSMC, Samsung, which fabricates the chips. So revenue up close to 28%, gross profit up 29%. All numbers look good. Beat on both bottom line and top line. So not only it was a fourth quarter was a record number in terms of revenue. But when you're looking at this company, looking at one quarter doesn't make sense. They also shared their bookings. Bookings was $7.1 billion, which was like way higher than what they had it in previous quarter. But generally, their bookings will stay lumpy, and I don't want to focus on quarter-to-quarter bookings. So next quarter, I'll not share what's the quarter-to-quarter update. Reason is even one small single order can actually make a huge change. So they sell machines which are like priced between $200 million to $400 million each. Right? And let's say one machine order moved from one quarter to another make a huge difference. So when you're looking at an ASML, maybe we should look at a much longer horizon. How are they year-to-year basis, 2-year basis, rather than quarter-to-quarter. Cash, they got almost $5 billion cash on their balance sheet. High NA, which is their latest machines for extreme ultraviolet lithography. This is called high numerical aperture. They've actually recognized revenue on 2 of the machines. I think one they have sold to Intel. Another one, I guess they have sold to SK Hynix. I don't know where the third one. So they actually shipped the third one also. They didn't, obviously they won't tell which the customer is. But now the list price of these machines, I guess, is between $350 to $450 million each. So 2 machines make $1 billion. That is why it is we should not look at quarter-to-quarter basis, because one order can just make a huge change. Installed base, which is the machines that are already installed in the fabrication plants across the world, they are seeing a $2.1 billion. Why? Because there is a maintenance going on, there's a support required, some machines can be upgraded and all that stuff. So machines that have been there for 20 years, 30 years, they're still working. Of course, and to support them, you need ASML continues to earn revenue. China in 2023, sorry, the last quarter we saw China, no, so yeah, 2023 China revenue was up, 2024 China was down. And I think now the China revenue will go back to the normal level that existed before 2023. So a lot of concerns came around that your China revenue has fallen by a lot. It is because some of those Chinese companies have pre-ordered the machines before the export restrictions come into picture. Again, ASML makes some of the machines it is the only company that makes machines EUV which are needed for the high-end chips. So US, and this is a Dutch company, US and the Dutch are pals. We put an export restriction that they cannot supply those high-end machines in China. So some of those Chinese customers, they had front-loaded their orders in 2023 so that before export restrictions come in, they could get some of those machines. But and now it should go back to the normal level, which is the older machines they can still supply to China. Guidance is still between $7.5 to $8 billion with a gross margin of 52 to 53%. Full year is $30 to $35 billion. It pays dividend. It also buy back some shares. They did not buy back any shares in last 2 quarters. But in 2024, overall it has bought back 575,000 shares, right? Now in 20, if I look at their cash on their balance sheet in this quarter, their cash on their balance sheet was up almost $5 billion, right? So now I'm expecting maybe they'll do a buyback in next quarter because now they got some extra cash on their balance sheet. Again, I don't know, but I suspect what are they going to do with that $5 billion that they received, right? So quarter on quarter, long-term trend look great. Revenue growing consistently between mid-20s, 20 mid, higher 20s gross profit margins, high 30s operating margins. I mean, it's a good business to own, right? And not super expensive. It wasn't super expensive. So anytime an ASML falls down because something happened in the market and I've still not have reached my portfolio position, I buy it. This time I did not buy it because I think, ASML didn't fall as much as some of the others. So that's ASML. And it has maintained its 2030 outlook at a $44 to $60 billion, whatever they have given earlier. So that's ASML. Any questions on ASML? Asif saying for hyperscalers that are deploying current Gen C GPUs, when the new gens comes in, how will that impact their tens of billion-dollar investment in older hardware? Aren't they already depreciated? I mean, if they are more than 5 years, 6 years old, the cost is already zero. They've already depreciated them. So only thing that would be, and I guess that's how they might try to replace the older ones for which the cost is already zero, and then and then bring in the new ones. Again, that's what Jensen Huang is betting NVIDIA on. They're not just AI. There's a bigger business, which is whatever trillions of dollars, is replacement of all the CPU-based servers to GPU-based servers with a new generation. Okay, so finally, Apple. I did not have a chance to go through Apple. So today morning, I just took the numbers. So let's look at the numbers. I've not looked into the press release or anything. Revenue is up year over year, 4%. Right. 3-year CAGR revenue is 0. So looks like Q2, 2022, January, the revenue was $123 billion when they reported for a previous quarter. 3 years later, $124 billion. Almost no growth in revenue from an Apple if you look at a 3-year side, right? Year over year, only 4%. Gross profit is growing 6%. Operating margin is 6%. Sorry, operating income is growing 6%. It's a decent business. I don't know if you're interested in anything particular on this one, let me know. But I think it's fine. But earlier, when it was 246, I saw that I can't pay up for 4+ PEG ratio for a company that is growing its revenue only in 4%, 5%. So someone asked me, how do you know it's super expensive? I look at, of course, the revenue. It's a good business. So I will pay up more than I would rather pay up for other companies. But will I pay up like 4 times, 5 times PEG ratio? Not. So at that point, I did sell some, but now I think I have a back ratio spread on Apple at 225. And if it falls down further, I'll buy it at 210. I think 210 is an area at which I'm willing to buy a little more. I sold some at 246. Maybe I'll buy it at 210. But more importantly, we need to look where everyone is focused on how is doing the China. They're getting kicked. They've been continuously losing their share in China at at a clip of almost 10% per year. Right. So it's something they need to change on China. I don't know what, but whatever the strategy is not working out. I think Tim Cook mentioned that Chinese government had given some incentives for people to go and buy electronic goods and all that stuff. And that were to come in January. So what he said was that the consumers, they postponed their purchases to January and did not buy the stuff in December. We'll see in the next quarter, then we should see a bump up in their Chinese sales, right? But they have to figure something else out. It's not a bad business, but it's not a growing business. So what it will do is continue to give you good dividend, buy back the shares until it finds a good growth engine, and which is what they have been doing. All the stock price is over the last, I would say 1-2 years have been because they've been buying back their shares. It buy back their shares, it gives a nice dividend, and that's all we are getting from Apple. We are not getting good revenue growth from Apple. It's kind of in the mid single digits. Can't call it as a growth company. But it can still be a good investment because if it continues to buy back the shares, then they do not have to grow. But again, depending on what kind of investor you are, you think, how much you want to own, or do you want to own it or not? It's not a growth story. It's a capital return story. It's a mature business. But if it finds another lever for growth, great. But look at it, but its balance sheet is pretty strong. If you look at it, they are holding what, $141 billion, right? Can't go against that. Like I can't go against Elon Musk ingenuity. I can't go against Apple's balance sheet. $141 billion can do a lot of stuff, right? It can do a lot of stuff. And they've been very judicious in spending money. They haven't done, what's the Apple's biggest acquisition? We don't know in recent times. They are very conservative in how they utilize their capital, and I like that about Apple. Management is not crazy in just going and spending money. Very particular. I'll have to give that to Apple. What is the next big thing for Apple? That's what we are waiting for. That's what the market is waiting for. What's the next big thing? And that's why we have not been rewarding Apple over the last, I would say, 1 year or something. If you go back to 1 year, how was there? There, I think still, they did get. But I'm concerned, what's the next big thing? Moving into the healthcare segment? I mean, they have some of those plays already in. Moving to healthcare, they've been talking about AI. I mean, if you can get an AI agents on mobile phone, Apple has got a huge distribution. That could be a big thing. The Vision Pro didn't really work out that well. Could they revive it? Maybe. And China is hanging on Apple. But they have a balance sheet, they have a money, they find a good, if they find the right strategy and right product, it's not a bad investment. If nothing else, they'll basically buy back the shares. I guess that's it for today. I can hang around for another 10-15 minutes. What else you want to talk about? If multiple shrink due to macro or China stall, buying back at these prices can backfire for Apple. Yeah, I mean, at the current prices, but I think Apple like consistently buy back the same amount every quarter, right? So if I look at Apple, I mean, you got, where's the free cash flow yield? Or it might be in ratios. Yeah, almost 3%, 4% free cash flow yield. I feel they can nail AI for consumers. Yeah, but right now it's their AI is what, Siri, which doesn't work. Right, so that's bad. Bobby said join late. Yeah, so Bobby recording probably by end of Sunday or latest by end of Monday is when will be uploaded. Sorry, there was a question.
Yeah, Vivek, one quick question. So, do we need any license to train anyone, or is there any particular license you have taken for sharing, training people, or just whatever the website you have? Is there any financial analyst license
For training what?
for training any students or in general?
Oh, I don't train any student. I mean, I just do this session because I enjoy doing this.
Yeah, yes, that's what I'm saying. Like any, if thousands of people can do that, is there a license required, or you can just train? There is no, because if somebody will suppose you share a screen said that you bought the TSMC or something, somebody went crazy and bought $1 million share, and he will approach you saying that, oh, you mentioned that.
Yeah.
What will happen?
Yeah, that's why I have the disclaimer. It's like I'm only talk about the stocks. Don't buy.
Okay.
It's not a.
So,
That's why I
so
put up.
basically, yeah. So I just want to know. So the disclaimer will help you anything, right?
Yeah, I'm not a financial advisor. I don't give investment advice. I don't know you. So, but I can talk about what I own. That's a free
I,
speech.
oh, that's a free speech, right? Okay.
Yeah, yeah.
Okay.
Constitution. Right.
Thank you so much. Because like in this market, like when I went to India, there are like shops every corner giving
Yeah,
this
yeah,
kind of
yeah, yeah.
lessons. And
So
I was in trouble last year having this same problem. He promised he will give me 20%. Instead of 20% upside, my account is 20% downside.
yeah. So don't fall for anyone who is promising you in terms of what they can, returns they can give you. So or they'll charge you for, you pledge up with me, and we can whatever. So my whole idea is find. So if you are really managing money, then you need to pass, maybe there's some certifications, etc. I don't manage money for anyone. But coming and talking about what I'm doing,
Yeah,
that's my free speech.
yeah, that is FINRA Series 65. So
Yeah, Series 6, yeah, Series 665. There are a few exams that you have to do. But
I see.
yeah, but I'm not
But
managing money.
in general, but basically, if you are managing something, then only you have to give. Otherwise, free speech, like you are training people, you are helping people, that won't affect anything with any
Uh,
lawsuits or anything, right?
yeah. So yeah, so I don't advise people on what they should buy.
I see. Okay, got it.
Asif says Siri AI equal to absent. AI is absent intelligence. That's funny. Long-term bonds. So long-term, do you opinion on them for holding? So long-term bonds will do well if the rates go down, right? Because they have a much bigger impact on the rate movements. So if we are expecting Fed to decrease the interest rates, now looks like market is expecting maybe only two. You're not gonna see much movement on the long-term bond rates. So if you pick up, let's say TLT, this is what 20-year plus, it's been in the dust for over last ever since the Fed started to increase its interest rate. It's been going down. So if Fed, let's say if we go back to ZERP environment, zero interest rates, then I would expect TL2 to come back up. But until then, it's going to be a tough ride. Now, if you want to hold the bonds, up to you. But I mean, you'll get your coupon, you'll clip your coupon, but from a capital side, you'll continue to lose value on this. But if you don't mind, if your intention is I just need to get this interest rate, yeah, go and buy whatever 10-year US Treasury bonds. What's a 10-year bond? It's like what, 4.7% or something? That's where a 10-year are. Cool. Anything else?
Vivek, one more question. So, any opinions or IWM Russell? Like, since we don't have rate cut, do you think you are still bullish, or until we don't have any rate cut, it's gonna be sideways?
So yeah, I mean, it's again, I don't know what's gonna happen in future, but if you're not getting rate cuts, IWM hasn't performed well anyway.
So,
Right.
yeah, it's not performing well because it's dependent on rate cut.
Yeah, it's depending on rate cut. We thought, oh, we're gonna get rate cut. We jumped higher in 2024. We didn't get it. Tom Lee came and then pumped it up, saying we're gonna get 50% higher for 2024. And then in the end of December, any hopes of rate cuts evaporated. IWM fell down. So yeah, but it's a good vehicle to trade. And I wouldn't.
Do you own position any
Yeah,
in
I own
IWM?
position. Right, they're in my top 15.
Okay,
Yeah, I own position. And then I'll trade option against it.
I see.
And but it's not a big part of my portfolio. Maybe 2% or something.
So then again, I'm again little lost. Like, so suppose you own a 2%, that doesn't mean that you have 100 shares. So how can you, if I suppose I have 50 shares, how can I play options against that 50 shares?
Or you can
I
do a
cannot,
spread, call spread.
even though with 50 shares, you don't need 100 to sell
Huh?
a contract.
No. Again, I think so. First of all, let me not give you the like, just know. It depends on what kind of a privilege you have. Right? I have a privilege where I don't have to own any shares and I can sell options day and night. But if you have a like say, and again, depending on brokerage, there are different levels of privileges. So there are some option levels where you can only buy option, right? That's the worst one. There's only very option level privileges where you can sell only cash secured stuff, right? If that means if you are selling a call, you have to have 100 shares. There are option privilege where you can sell spreads. So if I have less than 100, I will sell spread.
Oh, I see. Spreads. Okay. So
Yeah.
if you have 50 shares, then also you can sell. You don't need, you can sell spreads for some premium. Like
Yeah, make
$100.
sure that you have your spreads, your level allows you to sell the spreads, then you can sell.
I see. I see. Got it.
Yeah. And then the higher level privileges where you can do anything and everything, can sell naked calls, naked puts, everything.
So overall, are you bullish on this year, or you are looking for sideways market
No, I'm bullish.
for this year? Even there is no rate cut.
Yeah.
I see.
Now that doesn't mean
So
market is gonna go up. You forgot what I said last session, right? If I always say that I'm bullish, I'll be right 2 out of 3 times. Because market goes up 2 out of 3 times. Right.
So
So
I'm still not able to understand the logic behind this FOMC every month or every 3 months, where we have rate cut, we don't have rate cut. How that factor is priced in? Like, it rate cut means bullish, or rate cut doesn't means bullish, or
it
it doesn't
depends
care.
on what
It doesn't.
market is thinking. Depends on why the rate cut. And again, market is very fickle animal. I mean, it's better if we don't have these FOMC coming in here. Like 20 years ago, we did not have this FOMC coming and talking every quarter. We hardly used to notice that the Fed has changed the rates. I'm not me, but when I read about it, nobody bothers about what the Fed is doing. But now, because we are like deluged with information, we are trying to optimize for every small piece here and there, and all the institution money is trading on algos and all that stuff. Now, the idea is if Fed is cutting the rate, it means there is more liquidity available in the market. It means more money for the people. It means they'll go and buy more stuff, or I'll have basically you can take more loans, and that'll be good for economy. On the other side, if Fed is cutting sorry, of if a Fed is raising the rates, that takes the money, that sucks the money out of economy, because why would a bank pay you, give you the loan when they can make 4% by giving it to the Fed? Right? So that sucks the money out of economy, and it means you will purchase less, etc. That's why if there's the inflation is high, Fed will hike a little bit of interest rate. And again, Fed when we say Fed rate, that's an overnight rate, but it's not directly impacting you and me, but the other rates are dependent or look at a Fed rate and adjust themselves. But I'll be much happier if Fed comes only once in a year and say, yeah, this is what we're gonna do. But these things do provide us an opportunity that when market goes crazy, hey, whenever the market is crazy on either side, it's an opportunity for someone, who is active, and you have a longer term scenario, you can take advantage of that short term fluctuations. Oh, see, Alfred mentioned, right? 0DT, SPX, they all love FOMC because it is crazy. You can take advantage on that day. So, cool. I guess that's it for today, guys. Thank you very much for attending. And I did not get any, I think I had AMD. Let me take a note of that. AMD bringing. So yeah, I guess that's it for today. Thank you. And we'll talk again next week. Bye-bye.